Okay, welcome guys. Today's stream is going to be a little bit different. This is the first time I've ever talked on stream, and I'm not sure how the mic quality is or how it sounds or anything, so today will be a little test. And I'm just going to do some charting stuff today and show you guys a little bit about wave mapping and market structure and just kind of how I mark up a chart. Got a delicious coffee here. I'm in Tokyo. It's about 10:30 in the morning. So let's get started here. So I think what I want to talk about is what's called multi-time frame wave analysis, where you start on the higher time frames and then you kind of go down in wave fractal. So let's start on the highest at a 1 week, and we're looking at the Bitcoin chart here. So we're going to look at the weekly Bitcoin, and we're just going to kind of mark up some levels, and we're doing top down. So this will be the kind of the more larger levels to look at. And for everybody who is new to following me, I'm a Bitunix partner, and the exchange that I'm trading on right now and that I work with is Bitunix, and link is in my bio. We have a really nice deposit bonus going on right now and a really nice volume bonus. So sign up with SleepyCat, referral code SleepyCat, and take advantage of some of the bonuses we got going. We also have a Telegram trading room. It's totally free, but anybody is welcome to join. And we've got about 200 traders in there. And we've been together as a trading group and a trading room for about 2 years. So everyone is welcome, from expert traders to beginner traders. Everybody is welcome. So what I'm doing first is I'm marking up, like I said, the weekly chart, and I'm just kind of outlining the market structure here, so we can kind of get a good idea of the bigger picture of what's happening. And price action is fractal, so like that means that there's going to be waves within waves, and it's when you're doing top-down wave analysis, it's important to understand that the larger wave fractals hold more weight, but price action starts from the smaller wave fractals and then goes into the larger. But it's interesting because when you're doing the wave mapping, you're actually starting at the higher time frame and you're going down. But price action creates the wave fractals from the smaller time frames forward. So it makes it good for trading, in my opinion, for scalping, because that means that even though the heavier weighted levels are on the higher time frames, the smaller time frames are actually what is pushing the price forward, making the larger time frame levels. So in my opinion, to be ahead of the game and trade the time frame that has the best results when it comes to wave projections is the smaller time frames. I'm a market order trader, but if you're a limit order trader and you trade levels, then the higher time frame levels will be stronger and probably better to use. But the smaller time frames, the wave projections have a better accuracy and hit rate, because you're actually, when you think about it, you're projecting price less forward in time. So that has a lot to do with it. And there's certain things you're going to see that are really interesting. Like I'll make these lines bold so you can see them in bold. And notice how symmetrical it makes this, like pretty much this triangle. it's not really a triangle, but if you notice the way that these two trend lines cross right here, it's a very similar angle here going this way and going up. And it's fascinating to me sometimes how price action really does follow some of the same principles of sacred geometry. And every time frame is very, very, very important. In my opinion, there is no one time frame that is better or worse than the other ones. And when you're doing top-down, multi-time frame wave analysis, all of them come into play. And they're all equally, like I said, equally as important. So what I'm doing first is I'm just outlining the market structure on the higher time frame, the weekly, just to kind of give myself some zones to be aware of. So when I go down to the smaller wave fractals, we're going to still see a lot of these lines that are in the larger, the larger wave fractal. And these will be the more heavier weighted zones and levels to be aware of as we go down into the smaller time frame wave fractals. And the reason why I put the shaded box around the level is because price doesn't always touch the level. Sometimes you're going to see reactions before or after the level, with wicks and things like that. So when I draw these shaded boxes on the weekly, and then I go down to the smaller time frames, it gives better representation of the full zone that I'm looking for. Not just a single line level. And with wave analysis and market structure, all you're doing is you're projecting forward in time previous wave data that gives you, just levels and zones to be aware of for reactions. So it's a reaction zone that we're looking for. And as a market order trader, it's the reaction to those zones that I trade. Using candlestick analysis for the reactions, and the wave analysis and market structure for what I call the outline. And as we get a little bit more granular, I'll show you my wave map system, which allows you to really map a wave correctly, giving yourself a series of 3 take profit zones based on whatever wave that you're trying to project forward. And ideally you want to get in on that wave and with a stop loss under or over that wave, and ride it out to the what are called measured move targets. So, and again, I don't know, this is the first time I've recorded myself talking on any type of video, so you may not even be able to hear me. I really have no idea. So after this is done, we'll check it. So okay, so after the weekly has been mapped, you can see this is a map. I have a few more things to add. And what I'll do is when I get finished with this, this weekly, what I'll do is I will take a screenshot of it and I will share it to the Telegram group. So if you guys want to see these charts in more detail and have copies of them, as well as if you have any questions, the best place to ask the questions is in our free trading group on Telegram. Man, the coffee here is good. Tokyo is amazing. I highly recommend Tokyo for any digital nomads out there. Tokyo is amazing. Okay, so almost done with the weekly. And the weekly's in a corrective wave right now, so there's no impulse wave for me to map. So I won't be doing the wave mapping for the impulse on this. The only wave that I can map on this right now is the current corrective wave that we are in. And a corrective wave is a three-wave structure: an A, a B, and a C, with the A wave being a corrective wave within the corrective wave, the B wave being an impulse wave within the corrective wave, and the C wave being another corrective wave within the corrective wave, which is technically a wave extension. The C wave is technically a wave extension of wave A. And there's a lot of, as I'm doing more of these videos, I'll try to do one every day for you guys, or every couple of days, and I'll kind of explain a little bit more about Elliott wave, and just kind of some of the, not the basic rules of Elliott wave. You can look up videos on that if you want to for more detail, but I'll explain more my theories on how I interpret and work with Elliott wave, which is a slightly different than the standard typical Elliott wave theory. It's another thing that I highly advise all traders to do, is to come up with your own theories and use things you like, all the different theories and things you study, and then come up with your own and see what sticks. Throw a bunch of shit at the wall and see what sticks. Every trader trades differently, and has a different personality type, which really affects the type of trading that they should be doing. Like, for example, I'm someone who always needs to be clicking buttons and doing something. I'm a very active market order trader, so I don't do very well with limit orders or swing trading. I prefer to really be active. So okay, here's a nice weekly wave map, or not wave map, but weekly market structure outline. And you can see that we're here in the Fibonacci retracement zone. And you can see here that this is the impulse wave on the weekly, which is the blue box. And we're in a large corrective wave here. And you can see, like, pretty much in the history of Bitcoin, almost, this is one of the larger corrective waves we've had. At least all the way back to 2023 on this chart. And you can see we're here in the Fibonacci 0.618. We almost touched it to the T, almost perfectly. And you can also see how it lines up with this really large zone. And you can see we outlined this zone here. Just for a second, I can think of this zone here. See, and see how price action seemed to touch it almost perfectly. And it's forming a wedge. And you can see here that we've got an embedded corrective structure, which just adds more weight and power to the current bottom, because it's a double C bottom. So sometimes you'll see triple C, quadruple C, or single C, but once you get into a double C bottom like this, when you see the two C wave extensions meeting up at the bottom, and you see that there's a corrective wave within a corrective wave, it just kind of means that the sellers are starting to get exhausted, and we should see some type of break of structure fairly soon. But to break the structure, we're looking at this level here. So the weekly structure break would be 82,200. And what I'll do is I'll make that even more bold. The really big bold, let's make that an orange line. That orange line right there is the break of structure on the weekly. So we have a ways to go. And technically we're in a corrective wave still, So the projection on the corrective wave, let me show you how I do that. And again, this is all still just on the weekly chart. But I'll take, here we go, the Fibonacci trend-based fib extension tool. And it's a 3-click tool, so you click once at the beginning of the wave, once at the end of the wave, and then again at the beginning of the wave. And okay, so click 1 click, click 2 clicks, and then back up here for the 3rd click. And a lot of these tools can be used however you'd like to use them. You know, the thing about trading that I love is there is no right or wrong way. I mean, I guess there is a right way to use a tool, but if you are finding results by, for example, having the 3rd click be where the retracement is, then do it that way. But I found the best results myself for having the 1st click the beginning of the wave, the 2nd click the end of the wave, and the 3rd click even with the beginning of the wave. And the reason why that's the way I do it is because if you look here, if I make a box, red box around the corrective wave, and then let's duplicate that box, and let's move the box down, you can see that the 100% Fibonacci wave projection, which is called the full fib 2 measured move target, is down here. And you can see it's pretty much one full times the length of the wave. So now we have the wave projections. So this is where I go like this. And sometimes I'll even do it like this. Okay. And then we've got some options here. And again, you see how symmetrical this line is to this line is? Very similar to how this line is to this line, right? It's important when you're doing wave projections that it's a good way to know you're doing it correctly by if your lines look very equal and parallel, because again it's fractal sacred geometry. So if everything is different and not symmetrical, then you're off. So let's make these blue because they're impulse. And if you notice where I'm putting the projections, the possible reaction zones, we have the one currently here at the 0.618 Fibonacci retracement, and which happens to be current price in the wedge breaking out. So this is the possible breakout. And we have the possible breakdown here from the possible breakdown here, which would be a wave C extension. And we can see here what I did was I did the projection of this wave here in red. And just so we can have a little bit more clear outline of these projection levels, let's make it even a little bit more bold yellow. These are the 3 zones to be aware of. So unfortunately, if we got a full wave projection, our full measured move target, which I highly doubt will come, is all the way down here at 20K, right? The full Fib 2 corrective wave measured move target is actually 21K, 21,128. So we'll put these at the possible reaction zones, all the way down. And see, this is the possible reaction zone because it's the 1.618 Fibonacci extension of this A wave. And notice how the Fibonacci extension levels seem to line up in confluence with the price action zones that we shaded in the first step. So it's always interesting to me how everything seems to line up. The most accurate way to trade, in my opinion, and the best technical analysts are, again, this is just my opinion, are wave analysts. I personally have found the best results with wave analysis, and market structure to me will tell you everything you need to know without an indicator, and there is no lag. It kind of is, what I like to say is that there's a form to price action. Price action moves with a distinct form. So, once you learn that form and you can kind of understand the way that price action moves, it's fairly easy to map it and have very accurate reaction zones. But trading execution and technical analysis are two completely different things. You can be an amazing technical analyst with the most beautiful charts in the world, but your execution could be horrible, which that happens to me a lot, right? Like I can make a beautiful chart and tell somebody exactly where the price could possibly react, but to be there and hit that reaction and understand how to trade it, that's a whole different game. And we're going to talk a little bit in this stream about candlestick analysis as well, because it goes hand in hand with market structure and wave analysis, because if you are going to be trading those reaction zones and levels with market orders, then you need to understand what candle patterns are, because that will be the confirmation, right? You're going to use the candle patterns as confirmation for those reactions, and candles themselves are also form data. It's data reflected in form. So each candle has data within that tells you what happened within that time period, and the form of the candle, the shape of the candle, will determine or will tell you what happened within that time frame. It's like a visual picture kind of representation of the battle between the bulls and the bears during that specific time period. So when you have the overlying market outline structure, and then you also have the candles for the picture of what happened within that more granular time period, it allows you to put two and two together and trade these reaction zones, with fairly high accuracy. And I'm a perfectionist, so you'll see a lot of times on my charts I have to have everything looking perfect, and I really enjoy the colors and everything. Like for example, before we move to the smaller time frame, we can see here, this is what I call a complete wave map and market structure outline. We've fully outlined the current wave fractal market structure. We've outlined the current wave projections, and we're kind of showing the levels and zones to be aware of to the upside and to the downside. So if we do get a corrective move here, we can see that the important zones to be aware of are 49,525, so roughly 50K, and then down here 36K, and the yellow lines, remember, are the weekly levels to be aware of, but the overall zones are here in the shaded boxes. So we've got everything we need for the weekly. So let me take a screenshot of this. I'm going to, let's save it. I'm going to save the image for later. so I can share that to our Telegram group. And I might share it on our X page too. Now don't forget to follow us on X at Shiraniko Sleepy. That's Shiraniko Sleepy. And you can, when you join the free Telegram trading group, you can find all of our links and everything in there. Okay, so now we can go to the more granular. So let's go from weekly to daily and see what the daily looks like. And this is where I kind of adjust everything to be perfect. When I'm on the weekly, I'm just kind of, going kind of fast. And each time I go down in wave fractal, I just make sure that everything is still set correctly. Okay, looking good. And I can show you what I meant by there's structure and waves within waves. We're going to see here on the daily that there's different price action patterns that are happening. Like the one I just outlined right here is a bear flag. And you can notice how when price broke structure, which was this point here, you can see that it was making higher lows and higher highs up to here to point B, and when it broke this local low, the structure changed to corrective, and you have a corrective wave within a corrective wave. And because that was a complete corrective structure, it started to move back up again in another B wave within the corrective structure, making higher highs and higher lows again. Let's see if it did any type of pattern here. No, this wave was a little bit more, just a little bit more of a irregular. No, I guess it still had a slight bear flag in there. Okay, and then again, you can find the local low that broke here. Okay, let's make that the structure breaks. I'm trying to make a little bit more bold for you guys so you can see them. And price action itself moves within a distinct form, and the way that it's fractal is the same patterns you're going to see on all time frames, and the way price action moves is it moves in waves, but it also moves in this structure that has these head and shoulders patterns, both inverse head and shoulders and regular head and shoulders. You're going to find the inverse head and shoulders at the bottoms, and sometimes you don't see them. Like right here at this AC bottom, the AC bottom, or CA bottom, whatever way you want to call it. There's no right shoulder or left shoulder, right? The A wave is always going to be your left shoulder, with the C wave bottom, the head, and the right shoulder is going to be your wave 2 within the impulse, and this is in the corrective structure for an inverse head and shoulders. And you can see here that there's the A wave. The A is way up here, so you can't really call this bottom inverse head and shoulders. And when there is no inverse head and shoulders bottom, that usually means that the corrective wave is going to extend further. Like you can see this first A wave here, the very first one, also does not have a head and shoulders bottom pattern. And you can see that it also did not, that was not the bottom. Because technically, like you could put a left shoulder here, a head here, and a right shoulder here, but there's no neckline, there's no neckline break, and that, to me, that's just, it doesn't work. So the fact that you did not see well, here's the big major weekly right shoulder. And because we did not see an inverse head and shoulders at the bottom of this A wave, it was not the bottom, and that's why it went into a bear flag. And then we broke down out of that bear flag. We had another full corrective structure, and again there was no bottom structure here. And we barely made a lower low. You can see here how close it was to a regular double bottom, and not an actual C wave extension. It almost didn't have this last C. You can see. You see this. You see how close it was to being above that bottom, but it did technically make the bottom. It made the C wave complete. So because of that, I can remove that line, and I can get in here and do this. And we can see we have a double C bottom again. And this A is above the C. The C is below the AC here. So we are officially bottoming with inverse head and shoulders. Right? So this becomes the double C bottom. And on the daily, remember the weekly break of structure is 82, but the daily break of structure now is 67,300. Let's make this bold. This bold orange line here at this B, the area here, this is now the daily break of structure. And the daily break of structure is forming an inverse head and shoulders. What's most likely to happen, and this is where I can, you know what, I'm going to do the right thing and not do wave mapping of impulses until technically we have an impulse wave to map. In the daily structure, you can see here there's no impulse. Because, why? Because this B, the B wave top, has not broke yet. This B wave top here at 67,300 needs to officially break for the structure to change. And what that structure change means is it's going from a corrective wave into breaking into an impulse wave. Impulse waves have 5 subwaves, while corrective waves have 3 subwaves. So as soon as I see a time wave fractal that is in an official impulse, then I can project forward that impulse measured move targets. But as far as on the weekly and the daily now, we can clearly see that both the weekly and the daily are in verified corrective waves still. There has not been a break of structure on either wave. So what we can do here is let's map this corrective wave. This is the A, the B, the C, even though this is a subwave within. I guess so. Technically I did this a little bit wrong, because this also is the full A wave. right to the B. So this is a triple C bottom, actually. So a triple C bottom is even more, has more weight and power. I mean, technically, I could do something like this and just, put it over like that. But I like it to be a little more clear for myself, so I can see when it's a double C or a triple C or a double A. It's important data for me to be aware of. So, but let's put the projections out. Remember, we can't project any impulses. We're only going to project the corrective wave. And again, I'm using the trend-based fib extension tool. And it's that 3-click tool. I'll do it again so you guys can see. It's this tool here. And I click once at the beginning of the wave, once at the end of the wave, and then another time at the beginning of the wave, and I drag it to the right. And what that does is it's giving me the wave projections for the C wave. So let's click down here, and you can also see that it's lining up with the weekly larger C wave extension, the 1.618 right here. See the confluence? So in the confluence area, I'm going to make another box just to kind of increase the intensity. Let's make it in blue just so you guys can see it. This blue zone is a confluence zone of this wave extension and the larger wave extension from the weekly. So it's the weekly 1.618 fib extension level in confluence with the daily full measured move target 2 fib. And we can extend our projections all the way. And then we can put our possible reactions. And these possible reactions again are in blue. And notice how I'm putting the possible reactions at the Fibonacci extension zones, right? Which is the 1.272, the 1.618, and the full fib 2. And just so you guys can see it, I'm going to make them blue, because those are levels to be aware of for possible reactions to the upside. And again, remember how I said it's important to have everything look symmetrical, because it truly is sacred geometry, and that's part of sacred geometry is symmetry. It's a very, very big, important part of sacred geometry is symmetry. So it's a good way to check your own projections and wave maps. You need to see that symmetry. You see the perfect triangle here? The symmetry of everything, the way the lines are overlapping each other. It's very important to be aware of. Okay, so another thing that's important, on the higher, when you're doing this top-down, multi-time frame wave analysis, is the higher time frame information that is irrelevant on this time frame. Like, see this line here? I'm going to delete it because on the weekly that had value, but on the daily it has no value. So I'm going to remove it. Okay? There's still value in this AC bottom to B, because that's part of this current wave mapping, even though this orange line here is kind of off center. But let's put that, let's change the angle of that, because we don't want to confuse people with a resistance zone, because that's not a resistance zone. It actually, would make, so if we get another wave extension here, it actually makes a quadruple, a 4C bottom. Now when you start getting into 4C bottoms or 5C bottoms, that's when you know the corrective wave is coming to an end, right? I mean, just from, I mean, you're not going to see a 7C bottom, an 8C bottom, unless the asset or instrument is dying. And Bitcoin's not dying, right? This is a very healthy corrective structure. So we should not even see a 4C bottom. So very unlikely that we get all the way down here to the 4C. Okay. Oops, this moved over somehow that moved out of place. Okay. And the reason why I did not put the C here and I extended it was because until the B wave breaks and the structure changes to impulse wave, this C wave has not been completed, right? We're still in the active C. So the projection for that is actually down here. But let's add a angular trajectory at current price at the local low. There we go. And it's funny too how things line up. Look at that. Boom. Isn't that incredible how just the symmetry and the sacred geometry to me within, price action is just fascinating. Absolutely fascinating. So the white trend lines I'm drawing are, I guess, just typical standard trend lines that help with the market structure outline. All right, so we're almost done with the daily. And notice how we started with the weekly. So this is, in, like I said, top-down multi-time frame wave analysis and market structure outlines. And I wanted to take a screenshot of this. And we got to have it look nice and clean and everything lining up and mapped correctly. I hate a nasty, messy chart. I just want everything to look correct. And here, that's why I said some people call it a CA bottom and some call it an AC bottom or a double A bottom. And there's many names for it. Okay. Okay. It's looking good. Looking very good. Okay. That's going to be a nice screenshot. Yeah, okay. Let's screenshot that. Save image. Okay. Now we're ready to, and before I go down one, the current structure is corrective, right? Bear flag, breaking down, consolidation, possibly breaking down here for a C wave extension all the way down to this C here. And this would actually be, watch this, this would actually be another possible. So, I mean, you're looking at a 5C bottom down there, which is, a 5C bottom is extremely unlikely. I mean, if we get down there, it just really is kind of means that the asset's very unhealthy. So, I hope that Bitcoin doesn't get all the way down that low. And it would not be a good thing for our Bitcoin. Okay, we want this to, again, we want this to look as clean as possible. Okay. I like the way that looks. Yep. I can work with that. Let's save that because I think I like this one a little bit more than the one I just sent out. So I'm going to save this image. Okay. And you know what? Let me delete this last one. I'll do that later. Okay. So let's go down one wave fractal more. So we're in the daily, right? We did the weekly and we've done the daily. So now let's go one fractal lower and look at the 4 hour. See what we're working with within the 4 hour. As I make some slight adjustments. Okay, and this is where we get to start getting rid of some irrelevant stuff to this, no value within this fractal. Like these orange lines, we can get rid of those. We know that this is the head of an inverse head and shoulders. Let's keep them, which is the current active market structure pattern that is forming. But it's forming. It's forming, which means it hasn't been formed yet. It's not an official pattern until it breaks out, because if this breaks to the downside and we do see the C wave extension here, then it nullifies the inverse head and shoulders, right? It's only going to be an inverse head and shoulders if the price breaks that B wave top. And I'm going to just put the relevant waves on here for what we care about on this. Okay. And you can see here in the red box that we made that you can see here that it is the A wave. So this red box is the A wave. And you can see here that this was the regular head and shoulders that broke. So that's an important zone to be aware of. And it's that break of the current break of structure we need to be aware of. What we're looking for here is the 67,294. So we're still in corrective territory until we break that 67,294. And again, notice how it's always the same patterns. Always the same patterns you're going to find. You're going to find the head and shoulders. You're going to find the corrective three-wave structure. It's always going to be the same shit over and over again, right? And you want everything to line up symmetrically, right? It's very important. Notice how, again, this line here and this line here are symmetrical. And like I said, one of the most important principles of sacred geometry is symmetry. So when we're looking for that symmetry, it's verification that we're on the right track with our maps. And this whole wave mapping and market structure outlining, multi-time frame wave analysis is my own theory, right? This is not something that really you can find anywhere else. It's kind of the way that I've interpreted and applied Elliott wave to my own analysis and how I do my charting. So it's kind of you could play this back a few times and you'll see the system that I use, and how it's the same as I'm going down each time wave fractal. It's really the same all the way down to the 1 minute. And the most important patterns to be aware of, the outline market structure, are the head and shoulders, the inverse head and shoulders, and the trend lines and the wave mapping. Okay. And like I said, the A wave is the left shoulder, the C is the head, on the right shoulder. Even though this is a really odd looking inverse head and shoulders, it still counts as an inverse head and shoulders. And then you can see the B wave here was that break of structure, the break of structure. So now on the 4 hour, we actually have an impulse wave, right? It's because here is, oops, I'm going to make this orange just so we can be consistent in our color guide here. This B wave that broke means that it is officially in an impulse, okay? So from the C to the B, we're looking at our first impulse. Very close to being, you know, as soon as this 67,294 breaks, then you're looking at another break of structure and a larger wave fractal. But down here on the 4 hour, more granular, we're already starting to see the break. And for a wave 2, this is important, a wave 2 needs to be, a wave 2 of an impulse needs to have a full 3 wave correction. So for example, this can't be the wave 1 because there is no 3 wave correction here, okay? And same with here, 1 wave. Same with here, it's really only 1 wave. But here we have a 3 wave correction. So that means this point up here, this B point up here, at this confluence of resistance from the trend line, is actually our wave 1 top. Okay? Because our wave 2, our impulse wave 2, needs a full 3 wave correction, and we got it, right? So we got the full 3 wave correction. But our full measured move target is going to be down here. Okay, so again we can do our projections. And notice how it's always the same, right? You notice how that it doesn't matter whether I'm on the weekly time frame or if I'm on the daily time frame or all the way down, we're going to go all the way down to the 1 minute time frame on this study. And it's the same exact system of mapping the waves and the market structure outline. And because the blue box is our first official impulse wave, we can map it. So this is a B1. This would be the map for the C2. Okay, and then 3. And let's extend our important lines. So these are 3. And notice how everything is lining up with each other, right? Notice how the projections all need to be symmetrical. Symmetry is key. I'm going to keep saying that because it's an extremely important aspect of technical analysis. And what we're learning today has nothing to do at all with indicators, okay? So we're not going to use any indicators on this study. This is strictly wave mapping. And it's not, I mean, yes, it's Elliott wave, but I think of it more as the SleepyCat wave map theory. Because again, this is not typical Elliott wave. This is my interpretation and way of using Elliott wave. Okay, so here's how we map. the Fibonacci wave extension tool, trend-based fib extension, from the bottom of the wave to the top of the same way we mapped the corrective waves, we can now map an impulse wave because we officially had that structure break. Okay. So the wave, so if you're projecting wave 1 forward, let me show you. If I'm projecting this wave forward in time, it's the Fibonacci wave extension tool that is going to give me that projection. You notice how it's just one order of magnitude larger, one fractal larger. You see that? You see that? And that is where the wave 3, what's called a wave projection measured move target, that's where wave 3 will go to. And you see the fascinating thing is how it all lines up with the structure mapping we did on the higher time frames. Everything lines up. Everything always should line up. If it's not lining up, then it's not correct. And look, it's to the T. I mean, you couldn't have something that is more accurate. I mean, it's literally providing a roadmap for price. And again, this is market makers. It's their job to paint a chart with this structure. So you're actually accurately mapping the correct path for the market maker to paint. It's his job, right? So the more you can understand the possible path that the market maker is taking, the more accurate your reaction zones are going to be. Like this wave 3 up here in confluence with this yellow shaded zone, right? It all needs to line up, and have what's called confluence. So let's put these all the way up to the measured move target. And then again, you can map wave 5 by projecting wave 3. And wave 5 typically is not as large as a wave 3. So we're not going to put the projection all the way up to the full fib 2. We're going to stop it here at the 1.618. So this zone here becomes the wave 3 measured move target, okay? And you find that by putting a Fibonacci wave extension tool here on wave 3. So wave 1 projects wave 3. Wave 3 projects wave 5. Wave 2 and wave 4 are corrective waves, and wave 4 cannot touch or go past wave 1 top. So that's a little bit of Elliott wave, the rules. Other than that, I don't really follow much of the other Elliott wave principles. I just kind of do my own thing, which is this SleepyCat wave mapping system. So now we've mapped the impulse wave. We've mapped the current structure. We can see here that it's obviously an inverse head and shoulders bottom, and we're pretty much done with the 4-hour chart mapping. So let me take a couple of screenshots. This is where we want to get the full impulse wave in the screenshot. And we can find a good angle. We don't want any overlapping logos or anything. We want these to be readable. Everything needs to be understandable and readable here. You know what, I'm going to get rid of this because that one's not as important. And we need everybody to be able to read all of the technical labels, because they're important. We don't want any of these technical labels to overlap. So this is a head B1. And the technical labels, once you really understand how to read price action, you'll be able to look at these kind of charts or mark up these kind of charts, and all these different technical labels, like a left shoulder A, or an AA triple C, or a 2C, or a B1. They all have meaning, right? It's part of what's called reading price action, and it's kind of like it's like reading a book. And the more you get comfortable with all this, the more you'll be able to just quickly mark it up and read it. This one, I got these overlapping levels. There we go. Now that's looking cleaner. Okay, everything looks clean. Okay, nice. Now we can save that. And let's get a little more granular. And we can save it from this view, which kind of shows more of a granular view of what's happening here. Yep, it all looks correct. Let's extend this over. That's a pretty big zone right here. I'm actually going to put a blue shaded box here, because that's a pretty big zone. Okay. Let's save another screenshot. Move up this to here. Okay, nice, beautiful. This is really showing a good view of what is happening here. It looks correct. Let's save this one. Okay, and let's go down in wave fractal to a smaller wave fractal. And again, this is top-down multi-time frame wave analysis. So we started with the weekly, we went to the daily, and then the 4 hour, and now we're going to go down to the 1 hour. And you're going to see more of the same, waves within waves, doing the exact same thing. Let's move, and now we can see that for this is that the impulse wave is not as important, and that blue line doesn't really have much value in this wave fractal. This right shoulder is important, and we have another structure. Again, structures within structures, waves within waves. Always the same shit, right? And notice I'm using the same tools, the same everything. And it's always very, very similar. Right, and you can see here the local low that broke to change the structure to corrective. Right here, you're going to see the corrective wave here. And actually, the right shoulder would be the first right shoulder. So this would be a triple C or a double C. And A double C. And a lot of the terminology I use is also my own, like A double C, triple C, blah, blah, blah. But again, this is, I've been doing this for almost 14 years. It's my full-time job. And a lot of my theory and the words that I use and everything are my own terms. They're my own technical terms that I've made up for my own theories and my own way of analyzing price. And notice the symmetry between this line here, this line here, oops, this line here, and this line here. Notice the symmetry. And we can see here. Get rid of this, because that's irrelevant. And then we've got another structure to be aware of that needs to break. Oops. I use the horizontal array. Here's the B. This B zone needs to break. So on the more granular waves, we're in a corrective structure. So this is where it could get slightly confusing, because remember the 1 hour, the 4 hour is in an impulse. The 4 hour we see with this blue shaded square that we're in an impulse with the blue, right? But the wave 2, again, a wave 2 of an impulse wave is a corrective wave. So we're in that corrective wave. We're in the wave 2 impulse. And I could even show you, we could do this. Let's put back on the Elliott wave impulse, and let's do this, just so you guys can understand where we are within the wave. Because if it moves up from here and doesn't have a corrective move from current price, this will be more relevant, and you can see that we're actually currently in the blue impulse wave. Okay, like this. And on the 1 hour, we're in a corrective. Get rid of this. We're in the wave 2, which has and this shows that the wave is complete, because we have a complete 3 waves. And when I say the wave is complete, it doesn't mean it can't extend. C waves love to extend, so it does not mean that the wave is over. For the wave, for this corrective structure on the 1 hour, for the 1 hour corrective structure, which is the impulse wave 2, to be completed and verified, to verify the beginning of the wave 3 is official, we need to see this B wave break, which is 65,681. So now that's a very important level to be aware of. This level here at 65,681, that is the current wave 2 break of structure to verify wave 3. Until that breaks, we're still in the wave 2, and the wave 2 can be active all the way down to this 60K. Right, the wave 2 can be active all the way down to here. If it breaks 60K, this zone here, then the wave 2 is nullified. But wave 2 has more room to extend. Doesn't mean it will, but it can extend all the way down here to 60K. Once it breaks 60K, then this blue impulse wave is no longer valid, and we start looking at the lower projection levels down here that we were talking about on the daily and the weekly. But as long as we maintain this this current wave 2 3-wave corrective structure, and we respect 60K without breaking it, then we're currently still in that active impulse on the 4-hour. So remember, active impulse on the let me start at the top. Remember, we have an active corrective wave on the weekly, active corrective wave on the daily, we have an active impulse wave on the 4-hour, and we have an active corrective wave on the 1-hour. So this is, and again, without using any indicators, we're able to know the different time wave fractals, which fractals are bullish and which fractals are bearish, and how they all live and work within each other. And we can see you can see the microstructure here. And notice how it's always the same. Like I said, I'm doing the same thing, using the same basic couple of tools. Even though this is a double top, technically if you take the candle close into consideration, you could call it a right shoulder, right? Because I mean, if I switch to a line chart, you can see slightly, you got it. It's still a double topper with the left shoulder as the top, but technically, I mean, you could call that it's still in the head and shoulders. And you can see the structure change. And notice again how it's always the same tools, always the same lines. And you see the symmetry, you see how parallel this is? See how this is parallel to this? And as soon as I see that it's parallel and has that symmetry, then I know I'm on the right track. Let's make these levels more visible because they're important on this time fractal. These are zones to be aware of, and see how this zone was important, and we saw the reaction here from that zone. And we're actively respecting the local low, current local low I'll put in blue, which is the 2C. Current 2C. So, okay, so this is now the next. Oh, we can put let's put a wave extension, because let's put some mapping in on this fractal, and it should line up with some confluence with the other ones. Let's extend this down. Let's make some blue projections. Okay. Now this is, I mean, it may look confusing, but it's really not. And as you get more comfortable with mapping these things, everything just kind of fits together like a puzzle. And that's how you also know you're on the right track, is when things really start to fit together like a puzzle. You know you're doing it right when it all lines up and makes sense. And you see here how the touch points at the B, you see that? And then it also is an important level here, touch point, another touch point here, touch point here and touch point here. You see all that? More lines of symmetry. And I guess you could kind of technically say it's a bear flag, right? Okay. Now we can save this screenshot because this is different wave fractal. So here we go. So here's the 1 hour wave map. Okay. Extend these zones out. Let's save this. And let's go down one more wave fractal. I usually skip 30 minutes and go from 1 hour to 15 minutes. Let's check out what we got going on here. Okay. And we got some important zones to be aware of on the 15 minutes. We got a nice break of structure on the 15 minute. See it here, and you're going to see how it's, again, remember how I'm just kind of doing the same shit. I'm doing the same shit on each time fractal. You can see the break of structure here. You see it? This is the break of structure. This is where, and this is where you start getting into microwaves. So we're in a current microwave break of structure, and you can see that this is the impulse wave, and you can see that it has a wave 2, which is a full 3 waves, and you can see how the wave 2 respects the Fibonacci retracement zone. Okay, see how the C wave here respects the gold, what's called the golden pocket, which is between the 618 and the 786. And because we can see that this is a verified impulse wave here in blue, because you can see the break of structure. Anytime you see a B wave top break, it's a break of structure. And again, the A wave is the left shoulder, the C is the head, and the right shoulder is going to be the wave 2 low. So in a break of structure, inverse head and shoulders pattern, the A wave low is going to be your left shoulder. The C wave low is going to be your head, and the right shoulder will be the wave 2 C low. Okay, so the wave 2 C low is your impulse wave 2. Okay, and let's put our projection zone. To make this more clear, let's make this is not as relevant anymore, so I'm going to get rid of that one. We're going to put our Fibonacci extension tool on the impulse wave to project our wave 3. Okay, and this is a trick I'm going to show you that I have. You take the B wave top, that is the structure break, you take a trend line and you connect it to the wave 1 top and extend. And that usually is either the wave 4 low or the midpoint that threads the line of the wave 4. Okay? It's a very important line. This line here is very important, okay? So now we have the current structure of the microwaves. The current microwave structure is impulse because we broke the B wave top right here. And after breaking the B wave top, there was no 3-wave correction in this area. See this area here? This area here? There's no 3-wave correction there. Okay? The 3-wave correction is in this area. This area is a 3-wave correction, okay? And that 3-wave correction is the wave 2, because wave 2 is a corrective wave. And for the microwaves, to verify the wave 3 is active in the microwave structure, we need to see this B wave break. So 64669 is the microwave important level to be aware of for the break into the wave 3. With the wave 3 projection up here at 66 at 718. So 66, 718 is your wave 3 projection level. And remember, we got that from projecting forward in time the wave 1 here. So by projecting wave 1 forward in time, you can see that it is 1 order of magnitude larger and respects that same full measured move target fib to extension level. And you can see here that the microwaves respected the support and resistance zone made from the breakup structure. It's in the golden pocket, and extensions are more likely to the upside, which just means the odds are more on the bulls right now for the microwaves. So the current active microwave structure is bullish. With a wave, and again, if we want to get the wave 5 target, we're going to map wave 3. So the wave 3 extension level for the measured move target of wave 5 is up here to 68,935. With wave 4 most likely pulling back into this more outlined zone here of 65, 681. So our current microwave outlook, our current microwave wave map and market structure outline looks like this. Okay, so we can save that now. And we can go even farther down. So I usually, now this is where I go down, instead of to a 1 minute or 5 minute, I'm going to go to the 3 minute, okay? Because the 3 minute will show you the smallest microwaves. The same wave fractal technically that's apparent on the 1 minute is seen on the 3 minute. So, you know, I don't usually map all the way down to 1. I kind of stop at 3. So let's see, and you can see here, watch, it's going to be almost the same thing over and over and over again, right? And isn't it fascinating how things are respected? Okay. Like, look at how this point, this point, this point, all are respected. And notice how on the super granular microwaves, on the 3 minute, it's very similar to all the rest. Where your A wave is your left shoulder, your C is your head. You can see the break of structure here. Here's your break of structure. So even the super microwaves are impulse breaking structure. This, yeah, here's your 3-wave correction. So that's your wave 2. And notice how it's the same on each. It's the same on all these different wave fractals, right? Like as you're going down from weekly, it should be the same shit over and over again. If each one you're doing something different and it looks different, then you know you're doing something wrong. Straight up. And you can see this is a verified wave 3. So we're currently in a wave 3. Wave 3 technically, or not technically, usually has 2 subwaves. So this is the wave 1 top, down to the 2C. And we can do the exact same wave projections. Let's make this a lighter white, this less relevant. Let's put our wave extensions on. We can, there we go. And this gives us our projection level here. We've got looking like this. And we want to project out wave 5 by mapping wave 3. So this will give us our wave 5 point. There we go. We can extend out this because this is an important level. And again, you can see how everything lines up and everything is symmetrical, and it's everything is waves within waves. And you can see another, look at this nice head and shoulders happening. Here's a head, double head, double right shoulder. Here we've got a nice head and shoulders breakout happening here. Very nice. Very, very nice. There we go. We want to make sure that we're still able to read everything correctly, so we don't want any overlapping labels anywhere. It's important to have it clean, because again, if you're going to be reading this like a book, you don't want to have it confusing with overlapping levels or overlapping, not levels, overlapping notations. Okay, this is looking good. This is our current microwave map. Yep, looks beautiful. So our current microwave is impulse, and our current full 5-wave projection is up here at 1.618. And that looks beautiful, that looks good. We're rocking and rolling. And just because this is another important level, it goes like this. And then this helps with symmetry, because remember the symmetry in sacred geometry. This line I just put here, I put this one here because it's helping me with the angular trajectory of this wave, current wave 3. And then I can do this from this B wave top to this is another important level to be aware of. And this is where you can see the wave 4 will channel in this zone here. So this zone here is where the wave 4 will channel into and then break out into the wave 5, right? So let me save this, and that's our microwave. Okay, and that's a full complete wave map, guys. We've got everything outlined to the upside and to the downside. We've got all the waves on all the fractals. And even though it looks like chaos, it's truly not, right? And then we can go up to the 4 hour, and I can remove all the drawings. And now I can show you something else. Something exciting. Now let's get into the exciting part, okay? The exciting part for me is the impulse wave projections on the weekly for the future price of Bitcoin over the next few years. And let me show you. We saw from the beginning of this lesson how and why this is all correct and the current structure we are in. Wedging. Okay, and we're going to show you the projection out of it. This is the fun part, right? This is the cool part. This is exciting. I hope I'm not talking to myself too, because I've never done this voice recording. This would kind of suck if I recorded a super long, awesome stream and then no one could hear anything I said the whole time. That would suck. So I don't know if I'm able, I don't know if I'm coming through clear or not. I'm very new to this whole streaming and sharing my work. 14 years I've been trading leverage full time. It's my full-time job. I've never shared my work with anybody until recently in the trading room I built on Telegram, which, like I said, everybody is welcome in. It's totally free, and I share my systems and studies in there. So here's some fun, exciting things to think about. We've got some measured move targets here. So what I believe price is going to do. So if we get a break to the upside, guys, this is what we're looking at for measured move targets. And so we're looking at 160K at the 1.272 measured move target, Fibonacci extension of the current major impulse. We're looking at the 1.618 at 195, roughly 200K. And we're looking at the full Fib2 measured move target here at 240K. And if we take an angular trajectory, and we just duplicate that angular trajectory, then we can see time-wise where we're looking. So down here at the bottom, we're looking 2031. And again, this is not exact, but most likely. And then we can, if you want to, even put some vertical lines at different key points. We've got 2027 New Year's here. Let's make it bold. We've got New Year's 2027. We've got 2028. We've got 2029. Let's get it this exact. We want to be as exact as possible for the time projections. We've got 2030. And we've got 2031. Okay. And let's put a smiley face on each area. See, I told you this was going to be the fun part. This is the cool fun part when I get to see where the price might be at what time based on wave mapping and what's called angular trajectories. Angular trajectories are very unreliable, so this is the likely path, but it doesn't mean this is the path it's going to take. This only means that it's the previous wave data projected forward in time, right? It's this trajectory that we've got going. And we're projecting this full measured move target, right? So it's those two data points projected forward. We're projecting forward the angular trajectory, which is this data point, and we're projecting forward in time the magnitude, the order of magnitude that the wave is going to extend, which is the Fibonacci wave extension. So here's our weekly outlook to 2031. Okay, so our weekly outlook to 2031, if we break out at current zones in this wedge, we're looking at, and this is where I move that to this side, these in white. Okay, 2027, we're going to be 77K. And again, these are not what I think is going to happen. This is just wave maps. I really have no idea what's going to happen. Nobody does. All the wave maps can do is tell you possible reaction zones. That's all. We've got 2028 at 114. 2029 at 150, 2030 at 188, and 2031 at 226. And again, I don't. This isn't what I think is going to happen. My gut tells me that we're going to see a more parabolic trajectory. I doubt that we go in the same angular trajectory as the previous weekly impulse did, because there's more institutional adoption. We're going to see, I don't know, I think we're going to see a little bit more vertical trajectory and parabolic trajectory. I personally think it's going to be something more like, let me show you. I think it's going to be something more like this. This is what I think we're going to see. Okay. This is what. Let me put a big dotted line for this. This is what I think is more likely. Right? But we could see either way. So let me save this because this is an important projection. This is the weekly projection to the upside. The very first thing we did was the weekly projection to the downside with the current levels to be aware of that are near term, what's called near term. This is not near, what I'm doing right now is not near term. This is like long-term projections. So the long-term projections are looking like this. So long-term projections say it's not even with the more vertical parabolic trajectory, we're still going to possibly be under 200, hitting 200K somewhere halfway between 2028 and 2029. 2027, we might chop around between 150K and 80K, right? Between 80K and 150K, and then we draw a box to show you. This is our 2027 outlook, possible outlook. Our 2028 possible outlook is more like this. Our 2029 outlook, we're looking like this. And our 2030 outlook, we're looking at, possibly could go up, to 200, 280. 280. Put a horizontal line up at 280. I think that is a kind of realistic representation of what could happen over the coming years. I mean, of course, it could fly way higher, way faster. Nobody knows. If someone tells you they know what's going to happen, then stop following them, because nobody knows what's going to happen. The only thing we can do as technical analysts is give ourselves accurate projections for possible zones to be aware of for reactions. The price does what it wants to do, and the market maker moves it how he wants to move it. So yeah. So here's the weekly, long-term projections. Yeah. So I'm going to save this stuff to the Telegram and post some of them on X. So I think I'm going to cut the stream here. This was a nice lesson, and I hope you guys learned something from it and stop the stream.